Hello, everyone. Excuse me. And welcome to Chapter 3 of Michigan, 5th edition. And Chapter 3 is titled, What is Money? And basically, money or the money supply, as we all know it, right, is anything that is generally accepted as payment for goods or services or in the repayments of debt. So, currency. So I just want to mention currency here, right? Consists of paper, bills, and coins. And this will definitely fit the definition, right? And is one type of money. So when most people talk about money, they're talking about currency. If, for example, right, someone comes up to you and says, your money or your life, you should quickly hand over all your currency rather than ask, what exactly do you mean by money, right? You're going to be a little, you may lose that argument. All right, so the word money, right? It is frequently used. It's synonymous with wealth, right? You'll see sometimes the word rich, and that'll mean that someone's got a lot of money, right? So, I mean, there's a lot of terms here. Let me. All right, so wealth, right? Money is basically a stock concept. A stock concept means that what? That basically you have some money, and basically you don't know exactly how much they have or over what period of time it is, right? So it's called a stock concept, and basically a wealth is again the total collection of pieces of property or whatever assets that serve to give you value. And your income is simply your flow of earnings per unit time, and that's a flow concept. So basically, money and wealth are two different sides of the coin here, right? So basically, income is again this flow of earnings per unit of time, and money is a stock. It simply is a certain amount at a given point in time. So if someone says to you he has an income of $1,000, you don't know if he means he earns a lot or a little without knowing whether he earned that over what period of time, a year, a month, right? But if someone tells you that she has $1,000 in her pocket, you know exactly how much this is, right? So money, the way we're going to define money in this book is going to be anything that is generally accepted as payment for goods and services, okay, or in the repayment of debts, and is distinct from income and wealth. So there's a distinction there, okay? So I want to make sure everyone's clear about that. So again, it's a medium of exchange, right? All right, and it's eliminating the trouble. I mean, if you want to find a double coincidence, meaning I trade you and you trade me this, and it reduces transaction costs, right? And it allows people to specialize in what I mean by promote specialization. You make this, and I pay you money, and that's your skill, all right? And again, it's all standardized. Here's all the definitions, right? It's standardized, it's accepted, it's divisible, it's obviously easier to carry, and it doesn't deteriorate quickly, except if you have inflation, of course. And also, it's very dirty, right? You always want to wash your hands when you're dealing with money. Money is dirty in many ways, but in one of them, it's physically dirty. People are touching it all the time, right? Okay, so again, and it's a unit of account, and it's used to measure value in the economy. And again, you reduce transaction costs, right? And obviously, cash or money, as it's known, another term, is the most liquid of all assets, right? And as I just previously said, during inflation, it loses value, right? You lose buying power. All right. So another thing that's a commodity of money, a commodity money is something that's valuable and it's standardized and divisible commodities, right? So what they mean here is it's like precious metals or cigarettes, right? Cigarettes are a commodity, right? People trade cigarettes. All right. And the money we use back and forth, our greenbacks, are called fiat money, right? Which is basically the government calls it legal tender. Okay, so it's all considered legal tender. So just a little bit more on fiat money, right? Fiat money is basically, as you see, it says paper, right? Paper currency, and it's basically decreed by the government as legal tender, meaning it must be accepted as legal payments for debt, but not convertible into coins or precious metal. But it's accepted as a medium of exchange, okay? Only if there is some trust in the authorities who issue it, and if printing has reached some a sufficiently advanced stage that counterfeiting cannot be duplicated. So this is fiat money, okay? All right, so checks, basically checks are an instruction to your bank to transfer money from your account, right? So it's a legal document, your check. And they allow transactions to take place without the need to carry around large amounts of currency. Now we do things electronically most of the time, right? Checks are almost gone, and we do basically e-money. We have debit cards and smart cards, and we do e-cash, right? I guess like PayPal. You've heard of all those things, right? PayPal. So let me... So this question has come up a lot, and I think a lot of us believe this is true. And I don't think it'll always be completely true, because people with bad credit will always have to have cash. Eventually, e-money is going to keep increasing, but there'll always be a small percentage of people who basically are going to want to use cash because they can't get credit. All right, so of course you've all heard of it, and the whole thing going around with Bitcoin, and the question is, will Bitcoin become the money of the future? My opinion, it's going to be it's going to be quite a while before Bitcoin becomes anything that's going to be a common and a viable use of currency. Some of you may think different, but I don't think so. I don't think it's going to be used anytime relatively soon all the time. All right, so money comes in different aggregates. That's how we measure it, right? This is how we measure it. And basically, M1 is basically, it's all based on liquidity, and it's the most liquid assets, right? So M1 money is currency plus traveler's checks plus demand deposits plus other checkable deposits. And there's a nice table in your book on page 57 that breaks down the M1 money and the M2 money, okay? So it's a nice chapter. It's a nice table to go to. So here's M2. So they basically, what you do is add to M1 money other assets that are not so liquid, and that would be small denomination deposits and savings deposits and money market mutual funds. So you take basically your M1 and you basically add these items to it, and this gives you the total of M2. So here's an example of as of 2017, the different aggregates of money, measures of the money aggregate. Okay, and there's a nice little, they give you the links here that you can go to and find it out. These links are real handy. All right, so here's how basically M1 and M2 are shown graphically. Okay, and the sum of basically, there's also an M3. Okay, so there's also an M3. And basically, M3 is kind of like the total of everything. So they kind of call the total here M3. So these numbers are looked at by, the government tracks these numbers all the time. So here's just a quick information on where are all the U.S. dollars. And this is interesting. $4,500 of U.S. currency held per person in the United States. All right. So where are all these dollars and who was holding them? All the rest of the dollars, the criminals got them, foreigners. A lot of money's in accounts overseas, the Cayman Islands, and a lot of money's trapped overseas that companies don't want to bring back, as you know, and pay taxes on them. So here's the growth rate of M1 and M2 over the last 57 years. And you can see basically how they're both growing almost in lockstep. Here they kind of fall out of step a little bit here. And you can get this data right here on the St. Louis Fed. All right, so that's it for this chapter. It was rather short. So I'll post this up. Have a good evening.